Oh man, so 3 Arrows Capital, a crypto hedge fund which at its peak had assets under management of 5 billion, is teetering on the edge of liquidation, and this could have a huge impact in terms of a contagion effect on the rest of crypto. In this video, we're going to break down what's going on, what do we know so far, and what effect could this have on the wider market. Smash up the like button, don't forget to subscribe. As always, these videos are brought to you by PRIMEXBT, who are offering you up to $7,000 in bonuses. Yes, PRIMEXBT, click the link in the description, get yourself set up there and access your $7,000 bonus, which you can trade with without touching your original deposit. But right now, we need to look at this, because this is 3 Arrows Capital's fancy website. As you can see, 3 Arrows Capital is a hedge fund established in 2012 and focused on providing superior risk-adjusted returns, founded by Suzu and Carl Davis. Now, those of you on crypto Twitter will be very familiar with Suzu, who's a very outspoken co-founder here of 3 Arrows Capital. But what do we know? What has gone on? Well, the rumor started a little while ago when on Tuesday, rumors started to spread on crypto Twitter that 3 Arrows Capital, also known as 3AC wallet, was seen withdrawing staked ETH. Okay, so at the time it was seen withdrawing staked ETH from Aave and selling it across various transactions. So let's see if we can show you that initial rumor. So you would have seen this rumor spreading about 36 hours ago. 3AC in trouble. Carl Zhu hasn't tweeted or liked anything in days. Zhu took every coin and hashtag out of his bio, because before he had all his investments as hashtags in his bio. He took those off. He deleted his Instagram. An hour ago, they dumped 30k staked ETH and reduced all Aave positions. So then you can see all the transactions here on this tweet as well. So that started off the rumor mill into what's going on. We can then also take a look at Suzu's Twitter, which has been uncharacteristically quiet, and he posted this tweet just yesterday, which says, "We are in the process of communicating with relevant parties and fully committed to working this out." And that's all he says. So he leaves it kind of insinuating that they are in a bit of difficulty, they are facing some problems, but he's trying the best to resolve it. And we know he's not alone, right? We had the Luna issue just a little while ago. We know Celsius still to this day are struggling, still having stopped withdrawals, and it's getting pretty serious, right? We've had BitBoy Crypto, who's openly tweeted about it and then being sent legal letters. I mean, all this is being shared on crypto Twitter, and it shows kind of the impact and reach this is having, and the contagion effect of 3 Arrows Capital being the next crypto victim is quite huge. I mean, to put this into perspective, let's take a look at some of the names that they're invested in, which could see sell-offs if they have to raise liquidity. Avalanche, Bitcoin, Ethereum, Kusama, Near Protocol, Polkadot, Solana, Terra, not much more, right? And this is 2.0. Aave, Ardana, right? Some huge projects in here which they have their tentacles in. So this can have a huge contagion effect, as we've seen, again, many times in traditional finance. And ultimately, this is what's frustrated me over the last couple of months more than anything. I can handle a bear market. I can handle low prices. I can manage my investments and dollar cost average. What I don't like is when we've set up this mission statement of creating an alternative finance system, a decentralized one, to be better than the incumbent, to be better than traditional finance. It frustrates me when we see all these companies carrying out the same bad practices as traditional finance, if not more degen. And I think I posted this tweet about 24 or so hours ago. Nothing exposes bad practices better than a downturn. Finally, we'll find out which firms will never run correctly in the first place. Over-leveraged, misallocated, rehypothecation, under-collateralized. These are the common trends we've always seen in traditional finance. But here's the difference. In traditional finance, whether it was investment banks, whether it was lending platforms, they were always saved by taxpayers. But here in crypto, thankfully, but it's a double-edged sword, we do not have that safeguard in place. We do not have levels of regulation in place to stop these guys from being extremely degenerative and irresponsible in their allocations. And millions of people will be affected by this. We saw what happened with Terra Luna. Millions will be affected by Celsius and 3 Arrows Capital if funds are unable to be recovered. So this is huge. And now we can also take a look at this, which is a very interesting tweet thread, which I want to take a few minutes just to run through. So this is Danny. Danny works, or he's head of trading over at 8 Blocks Capital, high frequency trading platform. And he shared a story with us today, literally just hours ago. What happened between 3AC and us and what we know so far. From November 2020, we entered into an agreement with 3 Arrow Capital in which we would pay them a fee to use their trading accounts, okay? So they would pay a fee to use the trading accounts. As a delta neutral market maker in the crypto markets, we are very sensitive to trading fees. When you're trading 9 figures USD per day, even 1 BIP on 100 million is 10 grand. If you're doing this every day, it adds up to a lot quite quickly. So our arrangement with them, 3AC, was we withdraw whenever we want. 100% of the P&L belongs to us, okay? So it's their account in 3AC. They're just borrowing the account and they pay a fee for using the account. They're never to move our funds without permission, increases the risk of our positions getting liquidated, and in return, we pay them a fee for their service. This was mutually beneficial relationship over the last 1.5 years. We had known them since 2018, thought they were competent, and didn't think they were degen enough to lose billions and not employ basic risk management. On June the 12th, sorry, this was just a couple of days ago, 4 days ago, with the market dropping and needing some funds from the account for positions on other exchanges, we asked for a withdrawal from the ops team. So look at the trigger, guys. Look at the catalyst. And this is exactly what we learned from TradFi. Any kind of Ponzi scheme, I'm not calling this a Ponzi, but any Ponzi scheme or mismanaged portfolio where certain practices aren't being followed to the most ethical way, you can get away with it in a bull market. When things are looking good and liquidity is abundant, you do not have a problem. But the problem comes when prices start to get suppressed. When prices start to get suppressed, the scaffolding of your building gets tested. And that is where things start to become exposed. And you can see that's what triggered this sequence of events. So on June the 13th, so they asked for the first withdrawal and it was honored. On June the 13th, this 3 days ago, with the continuation of the drop, we asked for a bigger withdrawal. There was no reply, but we didn't think much of it at the time. After a while, the market stabilized, so we no longer needed the funds. We thought maybe they were just busy, okay? Fast forward 24 hours ago, our funds monitoring script noticed that approximately $1 million was missing from our accounts with them. We reached out to Kyle, the co-founder, Kyle Davis at 3AC, the ops team on Telegram about the missing funds. No replies. We tried calling them. They were online and they didn't come back, didn't pick up. So this is where it starts to hit you, right? Just like we saw with BitBoy and various others trying to take their money out of Celsius. When you suddenly want access to your capital and you can't get it, that's when it really starts to hit you that you may never see it again, right? There's plenty of people who were unable to get their UST out or their Luna tokens out, and then that was the last they saw of it at any sensible price, right? Then our traders noticed that there were a few rumors circulating on Twitter speculating on 3AC's insolvency. Since we were directly involved, we felt the need to tell the world about what had occurred and gauge the extent of the 3AC contagion. A lot of people reached out about what they know, many of whom have direct relationships with 3AC as well. What we learned is that they were leveraging long everywhere and were getting margin called. Exactly, guys. Over leveraged. What was one of my tenets of mistakes? Over leveraged, misallocated, rehypothecation, under collateralized. So clearly they were under collateralized and they were over leveraged in this scenario, and that is what we're seeing come to pass. Okay. Instead of answering the margin calls, they were ghosting everyone. So you can imagine lenders were ringing Free Arrow Capital, and yet they still were not answering the market calls, okay? The platforms had no choice but to liquidate their positions, causing the markets to dump further. However, they still have assets on a number of platforms. You know who you are. We call for you to freeze the assets so that those who 3AC owes can be paid back in the future after legal proceedings. For what it's worth, for the most part, they aren't speculating with clients' money like Celsius was, but however, they did use our funds of approximately $1 million to answer their margin calls. Not a great look whatsoever. And guys, look, just another reminder for all of you guys to be extremely, extremely careful in such a crazy market, right? We're in such a crazy market right now where prices really are getting tested. We're getting to this point where, if you've not watched my video earlier on today, looking at the on-chain metrics, a lot of the market is now in unrealized losses, and they're feeling it. They're feeling it. Margin calls are happening. Liquidations are getting tested, and when the sea goes out, you see who's not wearing underwear, right? I think that was what Warren Buffett said, and it's absolutely right. That's what we're seeing right now. Don't expect this to be the last affected. Don't expect this to be, just one. It's not a 5 sigma event. These kind of things happen when you have firms and businesses who just kind of grew on the back of a bull market without having sound practices in place. Stay safe out there, guys. Go through your portfolio, go through your allocation of everything. Just go through it with a fine-tooth comb and ask yourself, if you don't understand it, get your funds out of there, because chances are they don't understand what they're doing either. Don't forget to smash up the like button and subscribe, guys. If you want more updates on this situation as it unfolds, let me know in the comments below, and I'll see you in the next one.